Thanks to all of you for coming back to another webinar organized by Princeton for everyone worldwide. We're very happy to have Anton Korinek with us. Hi, Anton. Anton will be talking about AI, scaling laws, and markets. And before we give the floor to Anton, I will give a few opening remarks, and I also will then reveal the poll questions you answered so gratefully. Thanks again. So there's a lot of talk and a lot of chatter about AI and also how it will change our macroeconomy and how will it boost DFP growth. And of course, some pessimistic views and some optimistic views. Daron Acemoglu recently wrote a paper that is not so optimistic. So the whole GDP or productivity or TFP increase will be less than 0.71% over the next 10 years in total. So he uses the Halton's theorem and arithmetic approach, but it will be, not much of a big impact. Of course, on the other side, you have Goldman Sachs and others who are much more optimistic. They think the GDP growth will actually increase by 1.5% annually, so every year. And the argument is it's not an arithmetic approach, it's an innovation of an innovation. So the R&D process will change, and that actually will be much more geometric, and that actually will be much more dramatic. So we will actually figure out at some point which approach is closer to the truth. But today, we will talk much more about what I call the I/O of AI, so the industrial organization of AI. And the question is a little bit, should we actually promote competition among the firms which provide the I/O tools to reduce rent extraction? So we want many firms, free entry, a lot of competition. Or do we want, because of the dangers, control proliferation? That's similar to an existential risk and an analogy to nuclear technology. So I want to keep a small number of industry leaders you can regulate much more easily than hundreds of smaller firms. And of course, there's also on top of the industrial organization, the geopolitical aspects where the competition between US and China comes at the forefront. So in terms of the industrial organization, there's a lot of similarity, I would say, with network externalities, two-sided markets, similarity to platform economics, where we have already some insights in the I/O literature we can also employ in the AI literature. And one approach could be a layered structure where you have a layer one, where the base technology is not very competitive. So the foundation models, the LLM models, the baseline models are then provided by few less competitive firms. But then there's a second, a third layer where there are more bespoke technologies are provided, more bespoke models are provided, but then they're supplemented with private data, with privacy protection. And there's much more fierce competition in the second layer. But how to design the industrial organization of AI, that's a big issue. And of course, it also depends on technology. We'll talk about the scaling laws we'll talk about today. Of course, what we see at the moment is that, you have a huge increase in the Magic 7, or the tech stocks are exploding a lot. And some people talk about, is there an AI bubble? Is there a situation? What's the technology? Is it a winner takes it all technology? They become unassailable. You can't catch them up with them. If you win the prize and be a monopolist from then onwards, then it's actually, everybody's investing like crazy at the moment. But it also means that the laggers who are a little bit behind, and as the race is still open, will go to extremes. They go bananas or very extreme in order to be the winner. So there will be an extreme investment boom, which we're seeing at the moment. On the other extreme, you could also imagine that, if you look at the large language models, they become similar and similar. And it could be that several of them will remain, and they will be very similar down the road. And then there will be further competition. In that case, there will be not much rents. In the first case, there are a lot of investors, they're betting on the winner, they're hoping they have identified the winners, but there's only then one or few winners out there. And so many of them will be non-winners or losers. And this reminds me very much of the 2000 tech bubble, where everybody thought, okay, every little .com stock will be the next monopolist, but there is only one monopolist at the end for each segment. So for each Amazon, there were many, many losers. And overall, the stock market is going down. It's very hard to short than the whole stock market. The other thing which is special about this investment boom, there's a lot of private equity refinancing rounds. So for example, if you have one of these tech firms and they're not really traded on the stock market, you might be, there might be ex-shareholders owning the firm, And there's a new round of refinancing. The more funds will be given in. But then the question is, how do you value the existing shares? And you can always revalue them in an overpriced way if the old shareholders and the new shareholders are the same. So in the extreme case, let's suppose we all value each share $1,000, and that's a true value. And the new shareholders are exactly the same shareholders as the old one. We say, okay, no, it's worth $10,000, and we, give money in the value of $10,000 to the firm. But then you get the same number of shares, and then suddenly the old shares are also worth $10,000. So one has to be careful with, reevaluating all these companies. In particular, given that there's no public market, you can also not go short these stocks. Overall, you might say, anyway, at the end, all the revenues will go to NVIDIA, and there may be one of the shareholders too who have an incentive to push up the price and raise more funds in order to sell off more of their chips. Whether such a bubble is socially beneficial or not, there's a big debate on this. And often when there are network externalities, bubbles can actually be socially beneficial, even though the mispricing might lead to a different allocation, but it might not be a misallocation if there are other distortions. Now let me come to the bubble, to the polls, away from the bubbles to the polls. Here are the poll questions Anton put forward, and you gratefully answered. So the first question is AI scaling coming to an end? And yes, it will shortly come to an end. 5% thought this is what's coming up. No, but slowly they will come down, 46%. And C, there's no end in sight, 49%. So there's a slight majority saying, okay, look, there's no end in sight. The second question was the state of competition in the current market of generative AI. Is it healthy, temporary competition before we reach the monopoly stage, or it's already monopolized? And the answers are 39%, 41%, and 20%. Already monopolized is as the minority. The third question was, which input will be the biggest barrier to entry for new AI companies by 2025? Is it compute access, computational power, training data, or talent? And for this, it was 27% compute access, training data 46%, and talent 27%. So if it's artificial intelligence, who needs talent? But the majority says training data is actually the most constraining factor. Then we have question 4 is what should be the primary focus of AI competition policy, preventing big tech integration, ensuring data access, or letting the market work? And the answers are 28%, 43%, and 28%. So ensuring data access is actually what the majority said, 43% out of the 3 options. Fifth question is about open source AI, like Meta's Llama. Will open source AI models remain competitive with proprietary ones? Yes, there will be leading innovations. They will exit but lag behind, or they will become irrelevant. And there will lead innovation is a majority, 57%. There will exit but lag behind is 33%, and they will become irrelevant is 11%. So there's a huge tendency towards open source AI, according to you participants. And finally, how to balance AI safety with competition. Prioritize safety, 37%. Find the middle ground, 50%. And let the market decide, 13%. So find the middle ground has the most votes, and it's 50%. So as always, let me remind you, you can get the executive summary of the webinar we are seeing now, and it's just down below in the YouTube channel. You find the link for the executive summary. But you, of course, it's even better to watch the whole presentation by Anton. Anton, the floor is yours.
Thank you very much, Markus, for the thoughtful introduction and also for running this seminar series, which is really a fantastic public good. So I want to start by talking a little bit about the scaling laws that seem to be so central of what the future of the market for foundation models is going to look like. And I will put up the following graph here, which is one of my favorite graphs in the field. I put it up on almost all of my presentations because it shows how much the computational power employed to train frontier AI systems has grown over the past 15 years. You have a logarithmic scale on the vertical axis of this graph. So that means that even though the regression line that is put through the chart looks linear, this actually depicts exponential growth, and it depicts exponential growth at a really breathtaking pace of 4x per year. So in other words, for the past 15 years, the amount of computational powers that the frontier models have used has grown fourfold every single year. So this is much, much faster than Moore's law. Moore's law tells us that chips are getting twice as efficient just every 2 years. And that has been, from my perspective, the primary driver of AI progress for the past 15 years. This has not been the only one, though, because on top of the ever-growing inputs of computational power, we have also seen rapid increases in algorithmic efficiency. They're estimated to be somewhere around 2.5x per year. So if we multiply 4x times 2.5x, that tells us that the effective amount of computational power employed to train the most cutting-edge systems has actually grown by a factor of 10 every single year. So that kind of growth is something that, Markus, if we see that in financial markets, even for like 2-3 years, we know there's a bubble, right? But that's what's happened in the space of AI. So what do these scaling laws that Markus has already spoken about actually tell us? Well, in a nutshell, they tell us that more computing power leads to greater intelligence. And based on these empirical regularities, because they're just observed regularities like the typical economic laws, they are not fundamental laws of nature like what we would observe in physics. They have told us that if we put more computational power into training these systems, we get better outputs from them. And that has created an environment where the leading labs have been able to predict whether their investments will bear fruit and have been able to essentially tell their venture capitalists, look, we have these predictable relationships. If you give us the funding to continue that scaling, we will develop better models. And so in some sense, one could say that the scaling laws are at the heart of the frontier AI labs for all further progress. Now, let me be a little bit more analytical and let me describe what these scaling laws look like in the language of economics. And I should say this is kind of flipped upside down from the way that computer scientists would usually talk about scaling laws, because computer scientists frame them in terms of the goodness of fit of models, and they try to minimize log loss. Now, we economists usually try to maximize something. So I have turned it around. And the way that I frame the relationship here is that the scaling laws for training compute, which is the most widespread form of scaling laws, tell us that the intelligence or the capabilities of a model are a function of the number of parameters that the neural networks have that we use in these models and the amount of training data that we put into them. Now, the total amount of computation employed in the training, or total compute as a short form, is proportional to the number of parameters times the amount of training data, because for each additional unit of data, for each additional token, as they're called, you need to adjust all the weights of your network, so that creates a multiplicative relationship. And you can say that the total compute is proportional to the parameter count and the amount of training data. And it turns out that this production function that I have drafted here, where we put in a number of parameters and an amount of training data, looks very similar to what we are used to in economics. It is very close to a Cobb-Douglas form, which tells us that when we want to scale these models and use more training compute, we want to scale the number of parameters and the training data in the same proportion, just like with Cobb-Douglas production functions. In fact, one kind of rule of thumb, this is not exactly true anymore, but is that you want to use 20 times as much training data as the number of parameters of your model. And this relationship has held fairly tightly for a number of generations of models now. So basically, since we developed the first transformer-based large language models.
So
On the graph that you can see,
why is it a Cobb-Douglas and why is it not Leontief? It would be even more extreme. So elasticity of substitution has to be one, or?
Yeah, it's been one of those surprising things. It just turns out that the optimal way of scaling your models is to increase parameters and training data at the same rates. And for us in economics, that would correspond to a Cobb-Douglas function. And maybe it will change in the future, but for the past 7-8 years, that's how it just happened to be.
But do you know how costly it will be if you deviate from this ratio?
It would be a second order cost. And so at first, if you deviate a little bit, it would not matter too much. But if you deviate starkly, then it turns out you just waste a lot of compute. So for example, when the first GPT-3 model was trained, it turned out that they used too many parameters compared to the training model, to training data. And that was a very inefficient choice. And then later on, people used models, smaller model architectures with fewer parameters and more training data, and could get greater capabilities as less cost out of that.
But do we know that we are in a global optimum rather than a local optimum? I guess it's too costly to experiment on this dimension.
It is quite costly, but the leading labs are still spending quite a lot of investment on that because a lot of their decisions depend on these scaling laws. So there's a lot of trial and error. We cannot be sure what the optimum is. And in some sense, the relationships are also changing a little bit over time as we develop algorithmic tricks and so on. But by and large, whenever there is a relationship between capabilities and the amount of compute that you put in, you can observe some sort of scaling. So here in the graph on the slide, for example, I'm showing in the left figure, and I should mention this is from basically the model card of the latest OpenAI model 01. They show on the left panel how much the accuracy of the model has improved as a function of the amount of compute put into training the model. And I should mention here that the x-axis is logarithmic now. So if you move to the right by equal proportions, it means your compute is actually growing exponentially. And as you grow your compute exponentially, the accuracy of the model in answering a specific form of questions here, these are math questions from the Mathematics Olympiad in the US. You can see every time you double the amount of compute that you use to train the model, the percentage of questions goes up by roughly a similar fraction. But of course, since this is exponential growth on the x-axis, there are overall decreasing returns to scale doing that. There is a second scaling law, which suddenly became relevant when this new class of models was deployed, this new class of models that can perform reasoning. So these models, they are given the opportunity to basically crank through a sort of chain of thought before they provide an answer. And it turns out that if you let the model think for longer, so it's as if you gave the student more time to think about their answer before they respond, the model also gets predictably better at answering questions, and that is shown in the right-hand graph here. So that would be called scaling at inference at the point where the model produces output. And again, there is a scaling law that holds, and that seems to hold over quite a large scale of test time compute, quite a large scale of how much time the model is given to think. And so based on these regular findings of scaling laws, of predictable relationships between compute output and model, compute input and model outputs, these companies are comfortable betting ever larger sums on scaling and developing ever better models.
Can you explain the second figure? So the slope is different from the first figure. Is there any logical conclusion to be drawn from that?
So we don't really know what the scale is on the x-axis. And I think they just did that.
But the scale is not the same across the two figures.
Yeah, that's right. It's different scales. So in some sense, they just started the right image at a lower number. There's no significance to that.
Okay.
Now, if we continue this scaling, and labs are very secretive about how much they are really spending on their models. There are some reports that the most expensive model last year may have been close to $500 million. If we continue the scaling trend that we have observed in the past half decade, then we will soon be in the realm of $1 billion, $10 billion, and perhaps by the end of the decade, even $1 trillion models. So this would be just plain extrapolation. And of course, we all know that extrapolation comes at great peril. But in some sense, this also tells us the road to a potential AI winter if the scaling laws stop to hold and if the output produced by these models suddenly starts to disappoint. Because as the required sums to make further progress grow exponentially, it may become questionable whether it's really desirable for investors to spend ever greater amounts on this type of progress. So this has
some
led...
questions they would like to know where to get the data for the figures, the earlier figures. Is this from OpenAI?
So the first scaling figure was actually part of the model card that OpenAI released. And the one on the previous slide, that was just a simple extrapolation in my recent paper on concentrating intelligence, which is forthcoming at Economic Policy. So there has been a very recent debate on whether scaling laws are actually hitting a wall. There is some concern that the leading labs may run out of good training data. I think Gary Markus has called that the data wall. In economic terms, I wouldn't really call it a wall. I would say, well, maybe there are decreasing returns to compute, or maybe the decreasing returns are actually becoming exacerbated. Now, I want to observe that there are several countervailing forces to that. The first one is leading labs are increasingly using synthetic data, which allows them to essentially generate data that is useful in training their models further. We are also regularly making more efficient progress in designing more efficient training algorithms. So I mentioned earlier that there have been efficiency gains at a rate of 2.5x per year. And that essentially shifts these scaling curves. Every time we make breakthroughs in designing more efficient algorithms to train, the scaling curves shift. And the trade-offs between how much compute do we need to invest and what capabilities we get out of there become better. And yeah, finally,
can you elaborate on the synthetic data a little bit? how do you get synthetic data? It's essentially you extrapolate from existing data. So it's another form of bootstrap or extrapolation in a sense. You still have only the data you have, no?
Yeah, that's a really good point. So from a perspective of information theory, you can't create information out of nowhere,
Yes.
right? But what it turns out is, so the classical training algorithm for these models is to just feed in token after token and make sure that models are good at predicting the next token correctly. You can say in some ways that's a really inefficient way of extracting information out of the data that you have. So if you find ways of extracting insight in a more efficient manner, then you can actually generate more from your training. And so synthetic data essentially leverages that situation. It leverages the fact that current training algorithms are not the most efficient. So it turns out, for example, if you use better quality training data, if you omit some of your lower quality data, or if you filter it through another language model that essentially determines what is high value, what is low value, then you can extract information more efficiently. So it tells you, the fact that synthetic data is useful tells you that our training algorithms are not optimized yet at extracting information out of available training data. And yeah, finally, we have also seen that there are these new scaling paradigms, which essentially allow labs to scale other things than the training compute during the pre-training phase, that allow them to, for example, use more compute when the model produces output to also obtain better results. So my personal takeaway is, it may be true that progress may slow down a little bit as we run out of more and more training data. I don't think, though, that it will be a game changer. And I think there are so many other things to scale that AI will continue to advance fairly rapidly. So I want to continue now by taking a snapshot of the current market of generative AI. And the first thing I want to observe is that the market is characterized by really fierce competition. That competition is between AI labs, between the big tech companies that are increasingly backing the labs, but even between entire nation states. And each level of competition here on this slide is making sure that AI continues to progress rapidly and that further resources are deployed into creating better models. And my observation over the past 12 months, and I have just released a new NBR working paper describing that yesterday, is that progress has, if anything, accelerated. So this is an overview of what are the leading labs right now. It's difficult to determine which model is further ahead, which model is further behind, because there are many different benchmarks. But here I have randomly picked one of them, the so-called LMSys, which essentially lets models compete against each other and asks users to rate whether one model or another model gave a better response. And the LMSys calculates a rating for each model that follows the same algorithm as the ELO ratings in chess. So if you log into the LMSys leaderboard today, what you can see is that Google DeepMind is currently the lab with the leading publicly available model. They just came out with that most recent model last week, actually one day after OpenAI was the leader with the second model that is listed here. And as you can see, the benchmarks are very close to each other. So it's essentially statistically tied. The third lab is Elon Musk's XAI, which was founded only 19 months ago and is now number 3. And then a Chinese lab, O1 AI, is in spot 4, and Anthropic with Claude is in spot 5. So
can
two
you
things.
say a little bit about the Chinese thing? Because it was always argued they don't have the modern chips because of the Chip Act. How can they run large language models? Really, it was
Yeah,
argued they are lagging behind also because of regulation. It's not so easy to satisfy all the social requirements in China. And now they're catching up very quickly, and at the same league, they're even then, according to this ranking, better than Claude for Anthropic.
Yeah, according to this ranking, in other ratings it looks a little different, but my main takeaway from this table would actually be that the competition at the top level is fierce, and these models, for practical purposes, are all very close to each other. Those of you who are chess players know that if these were ELO scores, those players would be very close to each other. And in a typical match between, let's say, the first and the fifth, the first one wouldn't even win in 60% of all cases. So this is really a very tight race. Now, to your question, Markus, Chinese models have advanced really rapidly in the past 6 months. And if I continued this table to the top 10, there would in fact be 3 Chinese models. And you're absolutely right. China has been subject to export controls on the most cutting edge chips. Now, those export controls have not been watertight, so that's part of the story, but another part of the story is also that these labs are really good at using the compute that they have in an efficient manner. And I should say, this leaderboard measures US user preferences by and large. So perhaps it's even harder for Chinese models to rank highly in those. On the other hand, there are also people who say that Chinese models are more optimized for satisfying users in chat interactions. So maybe that gives them a leg up in the ratings. But I would say by and large, China is really very close to the US when it comes to AI capabilities right now.
A trivial question, why is it not ranked number 3? Based on the numbers, it would be number 3.
Sorry, say again, Markus.
If you look at the table, the Chinese Yi Lightning has 1287, which is ahead of Elon Musk's 1284.
I see, you know, that may be a
typo.
They are statistically tied, though.
Okay.
It may also be on different days. If you log in, the numbers fluctuate randomly. And so that may be the whole explanation. But thank you for catching that. So I wanted to make one more observations on this table, which is that all these models have been released in the last 3.5 months. What that tells us is if you haven't recently released a new model, you are not playing in the frontier. And it just illustrates again the rapid pace of progress in this space.
Can you give me an idea if you release, let's say, ChatGPT 5 everybody's talking about? Is this, you know, a big jump in numbers from 1361 to 1400 something? Or because there are all these interim updates from 0 to 01 and so forth.
Yeah, we saw 2 interim updates for Google Gemini in the past 2 weeks and 1 for OpenAI. So they happen all the time, in part because they constantly want to outdo each other. Now, where will GPT-5 be? I guess that's the billion-dollar question. In some sense, the labs...
So just to get an idea, if you move from GPT 3.5 to 4. How big was the jump there in the
yeah, I'll maybe switch to my next slide here, which tells us the jump here on the right graph for the original GPT-4, which had an LM-SIS score of 1186, to the August 2024 version, which has 1340. So that is a considerable jump, even though we are still at the GPT-4 level. And the one that came out last week, as we just saw, has a current score of 1361, so it's even better. And the other thing I want to show on the left panel of this graph is the rapid efficiency gains as reflected in the cost that OpenAI is charging for their model. So what you can see is a blue line here, which is the cost of reading text, basically per million tokens, which means million syllables. And the red line is the cost of generating tokens. And you can see the reading cost has declined from $30 per million tokens to $2.5. So that's more than 90% cheaper now within essentially 1.5 years. And for the output generation, the cost has declined more than 80%. So this is due to the rapid technological progress and also the fierce competition that we're seeing. So if we look at other forms of measures of market concentration, though, we can see that OpenAI is a clear leader when it comes to fundraising. And I should say Google Gemini, Google DeepMind is not on here because they're part of Google and not separately broken out. But the market capitalization of Google would be 2-point-something trillion today, 2.0-something trillion. So that's far ahead of OpenAI. But OpenAI, in turn, is far ahead of xAI, Anthropic, and so on when it comes to the latest valuation that they have received in fundraising in October, essentially.
But it would be interesting to see how much did they really raise?
They raised, I think it was about $6 billion at that
Yes,
price.
but you raise 6 billion and then the existing outstanding stocks get reevaluated, and that's maybe the whole reevaluation effect.
Yeah, so 6 billion out of 157 billion is not really that much dilution, right? And in the previous funding round, I think they were valued at something like 60 billion. So they have essentially doubled their value.
As I mentioned in my introduction, it could be that if you're an existing shareholder, you might be willing to pay 6 billion in order to reevaluate your old shares and push them up in value.
That's right, but there was a number of new external investors that came in at that price. Yeah.
It might be NVIDIA and others who can sell some chips at a higher price. So there's a lot of potential distortions there.
That's true. There were also a bunch of VCs.
Yes.
Yeah. But as you observed, there are no short sales possible in this market. No. So that means we only see the views of one side of the market expressed in these prices. Now, in the market for compute, the concentration is, of course, much higher. So NVIDIA has more than 90% of market share in essentially the market for advanced chips for AI training. And they currently have gross profit margins around 75% and net profit margins that are, I think, more than 50%. So that tells you they really have a very dominant market position in this market.
But isn't Google producing their own chips? Or they're not part of this chart, I guess?
That is true. So there is no kind of insight into how much Google is spending on their own chips because there are no market transactions associated with that. Yeah, but from what I have heard, NVIDIA chips are currently still significantly superior in terms of cost effectiveness.
So Laura asks, do you know about the annual cash burn rate of OpenAI or these companies? How much cash do they burn a year?
It's several billion a year. So when they raised 6 billion in their latest funding round, that will last only so long. Now, I do want to move on to the question of where is this all going? And I want to observe that scaling by itself will lead to significant progress, but the declared goal of the Frontier AI Labs is artificial general intelligence. what does that mean? So an AGI, as it is abbreviated, would essentially be an AI system that can perform any cognitive task that we humans or our human brains can perform. So that includes things like general reasoning, problem solving, abstract thinking, creativity, emotional intelligence, you name it. And one of the things that includes is to create better AI systems, because human brains can do that. So if we really have AGI, the AGI could also do that. And that would open up the potential for recursive self-improvement and potentially an intelligence explosion, so that these systems can essentially design better AI systems without human input and become smarter and smarter. Now, for all those of us who are like, well, but at least they can only do cognitive work, and we can all focus our attention on things that interact with the real world, I want to point out that robotics is really not far behind. So one of the lessons of the past year has been that once we combine robots with foundation models, with essentially better brains, with models like similar to the ones powering large language models, the robots become significantly better. So there is really scope for both cognitive and physical automation to proceed very rapidly if AGI is reached. Now,
so I agree with you, it's very fascinating. But if I look at self-driving cars, you know, we are promised already for decades now that will be happening, and it's not really happening. Humans are still better in many regards, even though just driving a car.
That's exactly right, yeah. And so AGI is something that pretty much everybody agrees we don't have right now. Right now, our systems are not sufficiently smart for that. And it will depend on further scaling and further technological progress. And I have tried to kind of reflect both the more aggressive perspectives on that, but also the more cautionary perspectives on that. So if we listen to, for example, one of this year's physics Nobel laureates, Geoff Hinton, who was one of the godfathers of deep learning, he said, I've suddenly switched my views on whether these things are going to be more intelligent than us. I now predict 5 to 20 years. And that was already last year. Sam Altman, of course, says it will be a reality in 5 years, give or take. And recently he's even said sooner. But then there is also a lot of skepticism among others. So for example, Jan LeCun says our pets are smarter than frontier AI. He says large language models are not the right technology for this, although he's open to the possibility of AGI using other forms of AI systems. And as Markus already mentioned in his introduction, Daron Acemoglu does not believe this is going to be terribly transformative, because otherwise it would probably be reflected in greater growth estimates. So what I want to suggest in the face of this massive uncertainty is scenario planning. Scenario planning is how corporate or military planners have long dealt with when they face massive kind of Knightian uncertainty. And in particular, I want to propose 3 scenarios that I found useful. One of them, I call it business as usual, is that our current generation of AI systems gives us a productivity boost, maybe like the internet boom, which was really not bad, but otherwise they won't change the world very much. A second scenario is that AGI may be reached within 1 or 2 decades, kind of the outer limit of Geoff Hinton's predictions. That means we would gradually advance towards that over the next 20 years. And then a third prediction, that we may reach AGI as soon as within the next 2 to 5 years, that we would really see rapid advances. And Markus, as you emphasized, that means the AI would also have to become smart enough to drive like a human, smart enough to write economics papers like a human, and so on. But
essentially, even your most case is much more optimistic than Daron Acemoglu's.
That is likely true.
because internet boom really caused a huge enhancement in the 90s and 2000s.
It gave us like an extra 1% of productivity for almost a decade.
Each year, not over 10 years in total.
Each year. Yeah, I think Darren's estimates, they are, I would call them, they are a good estimate for GPT 3.5. But even GPT-4 type levels, systems, the systems that we have right now, will, in my view, lead to significantly more productivity growth. And I'll see that in part based on my own personal experience.
Okay, perhaps we have to have some debate at some point between Daron and you.
Well, Markus, we have already discussed that it will give a boost to growth. And here on this graph, I have kind of simulated the output and wage scenarios. And you can see the faster AI develops, the better for output, obviously. But if we do develop AGI, then AI would suddenly turn into a force that can substitute for labor by definition. And that would severely challenge wages. Now, when I
But
talk
then it depends
about
very much who owns the AI technology. You might still have lower wages, but you might still enjoy the fruits of AI productivity.
Right, that's exactly right. And in some sense, there is the potential to take some of the gains that we see here on the output chart and distribute to people who have lost their labor market opportunities. And we could make everybody better off. So in
even if you use
principle,
some, large language models now, not all benefits go to OpenAI. It goes to you as well, I guess.
right. Right now, OpenAI derives essentially none of the benefits. We can see NVIDIA derives a huge amount of benefits, but OpenAI earns close to zero margins. And I guess all the benefits go to the input providers, which is compute, and to the users, which is in some ways, from a competition perspective, really beautiful. But of course, there's this big amount of rents on the compute side. But yeah, when I talk about the concerns about market concentration, I want to keep these scenarios in mind because I think the real reason to be concerned about competition in that market is not because of the way that generative AI works today, but it's because what generative AI may lead to in the future, especially if one of these more aggressive AGI scenarios materializes. And in particular, I think the market concentration that we are worried about would also spill over into power concentration. As Markus has already foreshadowed, this could lead to huge income concentration and wealth concentration, which in turn could give the dominant actors a lot of political influence, including influence to shape policy and their own regulation in the way that they want to see it, and societal control. If you own AGI, if you own systems that are as smart as humans and potentially smarter, it gives you a way to influence society in ways that we have not been able to imagine so far. And it would probably also have significant geopolitical impact. So if we look at what...
Isn't it possible for a government always to take away the machines from big companies or the intellectual property? I mean, if democracy votes that we will suddenly nationalize all these companies, it's a feasibility, So there's always the threat of being nationalized or being broken apart.
Right, yeah. Yeah, in principle, I think it is possible. The question is, if they use their political influence to become more entrenched, will it be practically feasible?
Yes, fair enough.
And that's where I have my main concerns. So we can see that there has already been a lot of action in the antitrust space. I think antitrust authorities are aware that people are looking at AI as a potential threat, as something that may become very powerful in the future. And I have listed a whole range of actions here. I don't want to go through them in detail. But I think one of the best ways of understanding what's going on is people's expectations about the future. If the size of the market for generative AI remains what it is today, which is at best a few $1 billion, then the antitrust implications wouldn't be all that important. But if AI becomes more and more powerful, then it would really be first order. And so I want to lay out my 3 main concerns about AI. So again, right now the market's extremely competitive and it's growing really fast. But my 3 concerns are, first, that the market for AI has a tendency towards natural monopoly. Second, and Markus has also mentioned that the risk of market tipping. And third, the risks from vertical integration. So I'll spend 1 slide on each of them. The cost structure of foundation models, which are the models underlying generative AI, is such that the pre-training currently costs hundreds of millions, and as we saw, soon potentially billions. And as a result, the number of players that may be able to afford this will start to shrink. Right now, we have like dozens and dozens of companies that do this. But the question is, how long will the market support multiple frontier AI companies? And economically, these models are essentially natural monopolies. So that means we may see a lot of concentration just based on that. The risk of market tipping that Markus mentioned, in some sense, our lessons from social media has been that, well, even if there is fierce competition in the initial stages, that may just be a grab for market share. And in social media in particular, there were very strong network externalities that ultimately led to market tipping. So it means every segment of the social network market has like more or less one large established player that controls the market. Now I want to observe, if LLMs stay the way they currently are, then the network externalities would not be as significant as for social media. So there are some small network externalities, like if you are a larger platform, you collect more user feedback. The common practice nowadays is that many model providers don't use the data you put in for training anymore. So that's not a source of network externalities. So the question is really, will this dynamic really play out again? Or are we fighting the last battle when we worry about market tipping? And one possible reason for market tipping that I can see is what I call an intelligence feedback loop. We are already at the stage where these models are smart enough to write a significant fraction of the code used for the next version of these models. So Google says, for example, that 25% of all the code they use is AI generated. Soon it will be 50%. And as it approaches 100%, the lab that is leading may develop a lead over the competition that they can no longer catch up upon. And that type of intelligence feedback loop where the best lab pushes ahead further and further from the other ones, that may create a similar dynamic to the market tipping that we have seen in the market for social media. Now, the third risk is vertical integration. And we have already seen, and Markus has also discussed that all the leading labs have received major investment from large technology companies. Here I'm just listing a bunch of them. And given the cost of proceeding with further scaling, they really depend on these investments. So it would be impossible to rely just on traditional VC forces to finance all that activity that's currently happening. Now,
But it could also be that, this hundreds of millions of dollars to make one new run of these models could come down so significantly that entry is more easy down the road compared to what it is now. Just to give it a more positive spin as well.
Yeah, yeah. So the fascinating thing is that the efficiency has really increased very significantly. Yet at the same time, the spend of the leading labs has continued to go up. So I think the efficiency gains, they shift the scaling curves, but the competition still makes the labs move along the scaling curves to spend more and more. And you're right, maybe at some point they will stop doing that, especially if the scaling laws start to level off or something like that. But that's not the expectation of the leading labs right now. But yeah, it could happen. We are talking about extrapolation. So the truth is nobody really knows. So
I mean, at
there
some point there
are
will be a constraining input like data, let's say, where you can't scale anymore because you can't, you can create some synthetic data, but not the real data.
yeah. So I think one kind of plausible how should I say, bottleneck that I can see is these models have essentially already caught up to the frontier of what we know in quite a large number of areas. And Markus, you and I, we know from our own experience and from our experience as teachers that if students learn the material that humanity has already created, we make much faster progress than once we build upon it and try to create new knowledge. And so I think we are actually pretty close to the stage where AI systems have already learned everything that there is to learn. And once they need to make further progress, that will be a harder process. Now, having said that, there's still lots of other ways of making them more productive, of integrating them into existing productive processes of the economy, where scaling has further to run. So I expect that we will continue to spend significantly more compute, but as you say, it's anybody's guess. So vertical integration, it can happen both on the upstream side with the producers of compute, and we can see already how NVIDIA plays such an important role in funding a lot of the players. With data providers, for example, xAI relies closely on Twitter/X data, and Google and Meta also have an advantage in training data because of the platforms that we own. And at the downstream level, integrating AI into existing products is also something that we're seeing a lot. So what are the risks from vertical integration? Control over key inputs by the dominant firms, and market foreclosure for smaller firms. And then at a more dynamic level, I think one of the concerns that is really quite salient is that concentration also has a tendency to stifle innovation. It limits kind of diversity, it limits people's incentives to try out new things. And that has some very clear downsides. Now, I also want to observe that as these models become more powerful, there are growing safety risks. And now I thought one of the cleanest ways to illustrate the trade-off is to talk about the type of models that kind of have the most desirable implications from a competition perspective, which is open source models, and what they imply for safety risks. So open source models, like the models that Meta or former Facebook is distributing, they have the benefit that anybody can use them for free. They essentially are implementing precisely what a social planner would do in the face of a natural monopoly, which is they are spending the money on training it and then distributing them at a cost which is zero to anybody who wants to download them from the servers. And the big trade-off that I see, and right now it's not that big yet, but it's going to grow, is that open source models, they increase access, but they completely remove any control that the producers of these models have over harmful uses. So they can be exploited for malicious purposes, for misinformation, for cyber attacks, you name it. And in some sense, those who have trained them have no more ability to control it, and under current law also cannot be taken accountable for anything that happens with their model. And
just to make sure I fully understand, so when I run a model, I typically tweak it in order to reflect certain social norms, or I don't allow somebody to download how to produce some chemical weapons. Open source, can I not do this before that and then make it available?
Yeah, so that's exactly what Meta has done. The technical term for it is called instruction fine-tuning and reinforcement learning through human feedback, where they basically turn the model to behave well and to be like the good chatbot that we want to interact with.
The weights are then adopted in that way, and then it's distributed with this adopted weights.
That's exactly right. Now, the thing is, the expensive thing, the entry barrier, so to say, is to train the foundation before you do that instruction fine-tuning and RLHF. And it's actually possible at a relatively small cost to undo those last stages. So, Markus, you and I, we would have to spend a week to read up on it. But if you're an experienced LLM programmer, then you can do it in one afternoon, and you can take these controls away, and you can use essentially the capabilities of the underlying base model and use it for anything you want. And so that's the big risk of open source.
And there's no crypto technology or something we can put on this, so it's not so easy to undo this corrective actions.
That's right. Yeah, I mean, if it's fully open source, then there's no way of doing that. But as you hint at, there are kind of intermediate ways to give people some of the benefits of access and innovation and maintain a certain level of control. And I think the big trade-off right now is how much control do we want the producers to retain, and how much are we willing to give the end users? I think for the current generation of models, I have to admit I was more worried a year ago than I am now about the current generation of models. Turns out Llama 3.1 does not seem to be particularly dangerous. People have abused it like they abuse everything, but it doesn't make me lose my sleep anymore. We don't know, though, if scaling continues, what the next models will be capable of. And so I think we're going to have to treat carefully and see how powerful models are before we release them open source.
But do you have any data how much it costs to run the foundation or the model, the basic model, and how much it costs to fine-tune it in such a way that it's, can be released to the public? Is the cost 90% to 10%, or is it 99% to 1%?
It's somewhere in between those, but closer to 99 and 1. So undoing these controls on a cutting edge model, it's gonna cutting edge as open source model, I should say, it's gonna cost you less than $1 million at current costs. And producing them.
No, undoing, but putting it on. How much does it cost to put on this control?
Oh, that's kind of the same, or almost the same. So yeah, they spend like 100 million on training it, and then maybe a couple million on fine-tuning it.
Okay.
Now, I also want to mention, and Markus, tell me if I should speed up a little bit.
Yeah, we have to speed up a little bit.
Yeah, I want to mention some regulatory concerns. Since these models have a tendency towards natural monopoly, it means the competitive forces are blunted. These models may soon share more and more characteristics of utilities, and we may have to regulate them in similar ways. So we may want to regulate them so they have a level playing field. We may want to regulate data governance in a way that it does not entrench monopolies, but that it actually makes it easier to port models and to have interoperability. And finally, these foundation models also run the risk of exacerbating systemic risks, because if a large part of the economy depends on either one model or, let's say, 3 models that all have very similar architecture, you can see how that may reduce the robustness of the system. And that is something that, Markus, you and I have spent a lot of time thinking about in the financial sector. Of course, there's also the risk of regulatory capture. So let me just conclude. I think the potential of these systems is enormous. They can enhance productivity, drive innovation, and solve many complex challenges. They will win more and more of the Nobel laureates going for Nobel prizes going forward. But there are also growing risks as they become more powerful, aligning them with human values, making them safe, and in the economic domain, ensuring competition so that the benefits are spread widely. And to end on an optimistic note, I do believe that if we steer these systems in a responsible direction so that the benefits are shared widely, they could lead to much greater shared prosperity. Thank you.
Thanks a lot, Anton. So you didn't answer the question whether we should slow down the development or not, or go full speed ahead.
Yeah.
Because the potential and the risk is also a question of time.
Honestly,
If I move slower, I can control the risks better.
Right. I'll say honestly, if we could make it go a tiny little slower, I would be in favor of that. But given the competitive dynamics that everybody is facing, I do not see a plausible way right now to enforce that collectively. So let's say even if Google and OpenAI agreed to slow down, somebody else would just push ahead. And even if the US did so, somebody else internationally would push ahead. We would really need a kind of global enforceable agreement. And I hope we'll get there before it's too late, but I don't think it is feasible in the short term. To make it enforceable, we would probably have to keep much better track of the compute than we currently are. So that would be a first step. To keep track of the compute. And then in a second step, we could also come to an agreement. Let's slow things a little bit down and let's do more research in responsible development and AI alignment to avoid the safety risks and the other social and socioeconomic risks that these models may produce if the scaling continues as rapidly as it has in the past.
Very good. So, let me conclude with one last question. There's this argument by Eric Schmidt brought forward, former CEO of Google, that once different robots learn at their own language and we can't understand what they're talking to each other, we should pull the plug. Or can you envision a setting where these AI agents, you didn't talk about AI agents yet, develop their own language to communicate to each other? And we don't understand anymore how they communicate. Are you worried about this aspect, or is this just right now when computers communicate, it's hard to follow to some extent either?
I think you're right. We are already at this stage where we don't entirely understand what's going on in these black boxes. I mean, in some sense, you can say they operate on embeddings that are just huge vectors of numbers that you and I don't understand. And that is, in some ways, already their own language. And nobody's pulling the plug. And they will very likely become more and more useful in the economy. And then at some point, it will become impossible to pull the plug, just like it's impossible to turn off electricity today without suffering really major damage to our economy and to lives. Like if we suddenly lost electricity on an extended scale, people would starve rather soon.
Mhm.
And I think
How
AI,
much would you
Markus,
suffer if you switch off your large language model in your home?
right now, I would only be a little bit less productive. And
Yeah.
right now, I guess that would be okay, although I would miss them, honestly. But as they become more integrated in the economy, that equation is going to change. They are going to become more and more of a backbone of the economy.
Very good. Thanks a lot, Anton. And I should remind our listeners that we will have more AI talks coming up in the next few weeks. And we're very glad to have had Anton today with us. And we stay in touch. Thanks again for attending the webinar, and I'll see you soon. Bye-bye.
Thank you, Markus.